Hello again, everyone. Welcome back. This is the market wrap-up for the week ending Friday, June 27th. Let's start off here with the ETF dashboard. This week, 13 sectors were positive and 3 negative. That's very similar to the 2 weeks that happened prior to the week before last. Okay, so you can see last week we had, and I say last week, I'm talking about the week prior, we had 7 up and 9 down. Prior to that, we had 2 weeks of this kind of activity, 13 up and 3 down. So very, very strong buying activity, strong animal spirits. We'll talk a little bit more about that in a minute. So the biggest, strongest sector was semiconductors, and it's amazing. They're just relentless. Up 7%, up almost 15% on the year. They've now surged ahead of industrials, which had been leading for most of the year. The weakest sector was energy, down 4%, of course, with crude oil collapsing the way it did. Home construction continues to be the worst performer on the year, ITB down 10%. So the index ETFs, the Qs continue to be the strongest, the technology leading 4%, but you can see everybody else was up here in 3% plus, and the Dow was almost 4%. On the year, the Dow is back positive. Nasdaq 100 continues to be strong, up 7.2%, and the Russell 2000, which had been very, very weak, is now coming back and starting to revisit the stronger bull case on the IWM. And I've got an alternate scenario. I'm not going to talk about it today, but I have talked about it with my members, the alternate bull scenario for the Russell 2000. We'll see what it does here over the next few weeks. Okay, that's a quick snapshot of what's happening there. Let's, what I want to do is dive in at the Dow Industrials and do a quick comparison of the side-by-side here between the industrials, the S&P, and the Nasdaq 100. The Dow was up 1,612 points this week. Big, strong move, surging above this cluster of closes and price action. And it's the highest closing price that we've got since back over here. What did it close at here? 840, and we got 8. So since the week of February 23rd, that's what we're looking at. Very close. But in the S&P and the Nasdaq 100, as you know, we're up here sitting at new weekly closing highs. The S&P was up 205, and the Nasdaq 100 up 907. It's continuing to push. All right, I'm going to go back here to the home page and look at the Dow Diamonds. Okay, so the Dow Diamonds on Friday were up 407, and for the week 1624. So there's that 1,600 points in the Dow Industrials, right? Very, very strong week in here. Monday, Tuesday, Wednesday, Thursday, Friday, just continuing to surge. Now they're still lagging behind the S&P and the Nasdaq 100, but it's going to be interesting to see how fast does this play catch up. Now, don't worry about this. It's because where it's linked in here. I'm looking at this being a fifth wave within the third intermediate wave, and I still think we've got more to go. What I'm looking for is this fifth little minute wave. Okay, I'm looking for that to finish. And right now, my target on this really is, it's down into this category, down in this area, I believe. Let me check something. Okay, actually my first target is 456, but I think there's a decent chance it could push above that. I've got several other targets, so we'll see what we get. And of course, the real wild card when you're looking at a fifth wave in here is, are we going to get a simple an impulse wave structure, 5-wave structure, or are we going to get a 5-wave ending diagonal where everything overlaps and they're all zigzags? So that's to be determined. We don't know yet, but that's where we're watching the wave structure and see what happens. But that's what we're looking at, looking for this fifth minor wave to finish off, and then we'll see what we get. All right, so that's the Dow Diamonds. Let's take a quick look at the SPY, which of course surged up 304 on Friday. They're sitting above the Keltner channels. You know, I think the divergence disappeared here. It did. Let me go. This is back on the weekly, which we already looked at. Well, we did on the SPX. So the RSI punched above the RSI reading of June 10th. So whatever potential divergence we had showing up in here just went away. Now we still have a longer term divergence between, mid-May and where we sit right now. But if we continue to surge, this could also just disappear. So again, divergences, indicators, they're all just that. They give a possible indication of something happening. Price action is absolutely key in terms of something reversing, something breaking down, etc. Okay, so that's the SPY. The Qs, they're on the same path, same picture in here, up 187 on Friday. Let's see, I've got a daily over here, the weekly, 21.26 on the weekly view. Okay, so that's where we sit with that. Now, the interesting thing on Friday is, let me look over here. This is a 195 minute, breaks the day into two equal candles. Let's take a look at that 30-minute view. So here's Friday. We close here on Thursday. You gap up and push, and then President Trump cancels negotiations with Canada. Everything goes in the tank, and in the last hour of the day, boom, right on back up. Heavy duty and volume, pretty good, strong volume in the last half hour of the day as it surges back up, stays positive, stays trending. So pretty relentless market right now, strong animal spirits. IWM, it was only up 7 cents on Friday, up $6.27, but for the week. But I really am starting, if this continues to push higher in here, you've got to sit back and say, well, maybe something else is going on. But it's been very, very weak. We've struggled trying to get into the bull camp, but I'm playing with a bullish scenario. It's just, I'm still keeping the bearish scenario as my primary wave count on it. And I'm not talking about the wave count on IWM today. Let's look at a couple of indicators to just kind of reinforce what the market's doing right now. And right now, the market is continuing to say risk on. I mean, the VIX for the CBOE volatility down 27 cents, continuing to push lower for the, 1, 2, 3, 4, 5 days in a row. The MOVE index, the volatility on the bond market. Every time it looks like maybe something's going to pick up, kind of like what it did back here at the end of March into April, back here in February, it just rolls over and dies off like this. So there's no volatility kicking in on the bond market either. And then when you take a look at the put to call ratio, let me pull that up. Here's the equity put to call ratio. So this is the daily, this is the 10-day reading. So the 10-day is sitting at 0.59, 59 puts for every 100 calls. That's nothing. There is no extreme sentiment coming out of the option pits whatsoever. We did get a little bit of bullishness kicking in mid-May, but everything is just kind of settled down. So, when you think about that kind of sentiment, there's nothing happening. And when you look at the McClellan oscillator, it's sitting at a plus 62.91, so say 63. Slightly above what I consider to be kind of a neutral zone, plus or minus 50. I mean, again, pretty doggone neutral. There's just no stretching of the market right now. When I think of up above plus 200, like stretching the rubber band, extreme. Stretching the rubber band down below, extreme, like happened in April, early April. Right now, dead neutral, even with the market sitting at new all-time highs. Pretty interesting stuff. Now, let's take a look at the high yield bond fund. Animal spirits. This is what you always look at and think, well, this is a pretty doggone good reflection of it. Well, it was down 4 cents on Friday, but look at the surge that happened this last week and take a look at the weekly chart. Okay, so we're sitting up 54 cents. This is the highest weekly close since the week of September 22nd, right over here. Okay, intra week, we surged to a point that was the highest since April of 22. So over 3 years. So that's a pretty good reflection of animal spirits. We seem to be, this area had kind of become here over the last several months, a little bit of resistance. But so far, it's proving to be, like it's pushing right on through it fairly strongly. Okay, so is that good English? Fairly strongly? I don't think so. All right, let's take a look at one stock I'm going to look at today, and that's Amazon, because the way things just surged on Friday, Thursday, Friday. I mean, Amazon was up $6.18 on Friday, and it was up $13.61 for the week. It's sitting just $14 below the closing weekly high that it had back here in January. So it keeps that kind of move up, and it won't be long. It'll be pushing and be right in sync with the Nasdaq 100. When you look intraday, look what happened on a 30-minute basis, the last hour of the day in Amazon, and huge volume in that last 30 minutes. And it was huge volume on the day, too. Matter of fact, this is one of I didn't go back and look at all the history kind of thing, but for an up day, this is one of the biggest volume up days that Amazon has had in a long, long time. So this volume day here was a down day. And when you scroll back, you go back to August of last year, that was a down day. Okay, so this is one of the highest volume up days in quite a while on Amazon. So it's going to be interesting to see what kind of follow through we get out of this. Okay, that's it for this weekend. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information, head on over to joehenches.net. Everyone have a great week. Oh, we got a holiday shortened week coming up this week, 3.5 days of trading. We'll talk to you on the next video.